Hey everybody, welcome back to another video with Freddy the Fish and Fibonacci Masters. This is lesson number 2. I'm going to start this one a little differently. We're going to do a little recap on just a few names that kind of pop out to me. Just kind of show you where they're at in a technical aspect. This has nothing to do with fundamentals, guys. This has nothing to do with any kind of announcements coming up this week. I know we have a few events coming up this week that can impact prices of stocks in a positive or negative way. So keep that in mind. This is assuming stocks continue the trajectory they are going. That is kind of where this, technical analysis comes from. So anyways, we're going to start off with Tesla real quick. Tesla just continuing to make a rip. You can already have some Fibonacci laid out right here. So this is the weekly chart right here. And you can see right here what it's doing right now is it's testing the supply right here from the Fibonacci extension. So if you did a measurement from right here from this candle, and don't forget this is a weekly chart, so if you did it from this candle to right here, this is the July candle, July 17, 2023, to this candle right here, which is April 22nd, 2024. So this is an extension. This would be an extension, right? You have 3 points, 1, 2, 3. So it's an ABC type measurement. And if you want to see the settings that I have for this, it would be right here. This is the sequence right here, so you can pause your screen if you want to change your sequence like mine. So that would give you these measurements right here. You've seen I erased the 161.8. I erased that just for aesthetic purposes. But let's zoom in right here, so you can see how well the price just respects these Fibonacci's. And this is a large supply right here. And not only is it a large supply, but you can see the green dotted line. That is the all-time high for Tesla at 414.50. So right now you have the price currently testing out major supply when it comes to the Fibonacci extension series 178 through 200. Then on top of that, it's going to be testing out the ultimate highs of 414.50. So it's got a lot going on. I don't think it's going to be an easy feat for it to go through that price, but hey, here's to hoping, right? I'm also long on this position. But even if it doesn't, I'm fine with that because there's support right below it. So let's just say there's a whole lot of selling right here. And market conditions just don't add up. Numbers that are going to be released this week do not meet the expectations of the street, and we get an overall sell-off in the market. Then Tesla can reverse back down into this zone right here, which is the next demand zone, 368 to 378, and it could find some buyers maybe and hold support. But if not, also it has this support level right here, which is 338 through 347. If the market just wants to hold it, kind of like right here, it held it for 2 weeks right here, and then it found new buyers, and that's what it's doing right now. But assuming it does that, then we're going to be stuck here for a minute. But let's just say all numbers are favorable and the market continues and Tesla just keeps ripping. The next magnet for this is going to be 432.64. And then from there, we are going to be shooting into the 500s, specifically 473 through 518. And once again, this is part of another Fibonacci series right here. So be expecting for it to slow down just a little bit right there as well. Next one we're going to touch on is Intel. I know there's a lot of people that are long on this stock. I was long on this stock, but I just saw that the market was not showing an appetite for this. I saw very little demand on this. And for me, when I see that my capital is just not, doing what I think it should be doing, I just get out of the trade. And sometimes that works in my favor and sometimes it doesn't. And the move does happen without me. And I'm fine with that. But ultimately in Intel, I just didn't see it doing what I wanted to do. And this is a supply zone right here. So this right here had a bunch of sellers. And here's the part that gets me about Intel, right? Is that this is a golden zone right here, and I'll leave the link in my description down below if you guys want to understand more of how I get these Fibonacci levels, how I get the golden zones. It's all Fibonacci related. It's a very advanced course, I would say. So I'll leave my link in the description, or you can just keep watching these videos for free. It doesn't really matter. But it found buyers where it was supposed to find buyers, and then it shot up straight into this supply zone. And literally this thing just 1, 2, 3, 4, 5, 6 grueling weeks of the price just hanging out right here. And if you were a short-term trader like me on Intel, then you were just waiting over a month for this thing to make its move. And if you go back on my tweets, you can see that I was initially targeting this $30 area. And I jumped out somewhere right here. I just got out. I got tired of this thing. And then it made the move, of course, without me. So it blew right past supply. And I was like, oh, wow, cool. It's going to make the move like without me, which happens a lot because I also have problems with patience. And I'm like, hey, that's cool. Like, people are going to go ahead and enjoy this move. And so I'm watching this thing. And let me get the shade down a little bit. This is a little too bright for me. So I'm watching this right here. And this candle right here, this looks like it was going to be the retest into an old resistance, now turned support. So I'm like, cool. You have the breakthrough of supply, right? Broke through the wall. All sellers are gone from this level right here. They've most likely moved up here now, which means these guys will now move up here. These buyers are saying we're in charge of this level. They're going to retrace back into this zone, and then they're going to ramp the price up here. But no. Instead, what happens? These guys just give up. These guys give up, and they get weak, and they just fall right back down here. All of a sudden, this buying appetite that was right here, this flag that got made, it just went literally nowhere. So for anybody holding this for a short-term move, I would say just kind of don't be too hopeful, because the price action is just showing there's no appetite for Intel. That's just all it's saying. I don't care too much about the fundamentals, the news articles, what it could do. I don't care. I'm strictly a price action trader, and this is showing there is zero demand for Intel for the short term. And if you go to the monthly candlestick, it looks even worse, because you can see that they bought the dip right here on this August candle, right? They bought the dip right in the zone. Then again, they bought the dip right here. So this is now 2 months of constant buying on the dip. So essentially the way it works, right, with Fibonacci is the buyers that are constantly buying this dip, after defending the dip on the golden zone, they start applying pressure and they start moving to the next zones up, right? Which means that's essentially the move I was looking for. And we're going to go up here. But look, all of a sudden for 4 months, they hold the price there. And then I look at this month. I mean, they just allow the price to fall all the way right back down here. And granted, it is too early to call this candle, because in my experience, the monthly candle doesn't usually form completely and start giving its actual signs of where the price is going to settle until about the ending of the third week of the month. The ending that Thursday and Friday of the third week of the month, usually candles will be pretty formed. And the last week, the fourth week, will usually just be, they'll hold it and they will solidify that candle. And it'll usually stay the way it's going to be. So I understand it's only the 10th. So if you're a long-term believer in Intel, for whatever the case is, then that might be a good place to start a position right here, because it does have institutional buying that has taken place right there. But if you're not, and you're just looking for a much better deal on that, then it looks like it even wants to sell off even more. If this thing starts cracking and closing below 1858, then that's kind of how we'll know that it's going to go down to the next supply zone or demand zone down, which I haven't even laid out Fibonacci, and I don't really care to. But it's going to be right where this cluster is at right here. So you're looking at between $12 and $15. That's where it's going to just plop down into. All right. The next one, since we're on chips, we're going to go ahead and talk about AMD. This was a trade that I was in, and yeah, I just had to get out because I'm just not seeing the market is showing some kind of demand for it. I mean, if we look at we'll start off with the daily chart. We'll go right here. So you can see the market has been defending it right here in this golden zone, right? Specifically in this Fibonacci line, which is, I mean, it doesn't get more exact than that, 132.02. The buyers have just been adamant about saving that price right there, right? And they're just shooting up to the sellers in the supply zone. So, sellers are just saying, shooting it back down to you guys. So these guys right here, if you think about it, they had a change of attitude from right here back in September, where they were cool buying it, and marking it up all the way to 175. Well, it came down there again, and they didn't do that again. If you notice, they didn't mark it up anymore. As a matter of fact, they just sold it. They marked it up into the 140s, and these sellers that were up here, they moved all the way down here, and they started just selling the price back down. So this is definitely showing that there is strength in the sellers and there is weakness in the buyers. So once again, just strictly price action related. I'm sure I've seen a lot of articles. I follow a lot of people on Twitter that talk very highly of AMD and its potential growth into the future and whatnot, but the market is just not showing that right now. It's not showing that it has that appreciation for AMD. So with that being said, as the price is moving right now, it is going to go down to the 121.74 Fibonacci area right here, which is the very low end of the current demand zone right there. So now if we switch over to the weekly chart, we can see what I mean by that. So if these buyers are still interested in buying AMD in this zone, they're going to get it for the cheapest price, which is going to be at the 121.74, and then they're going to rip it up to 141. And that, like I said, that's assuming if these buyers are still engaged in buying it in this level. Usually you have to wait for the candles to form. I'm not one to just guess that there is going to be buyers at 121.74 and just buy it like most of your Fibonacci type traders. And if you read my book, once again, that's what I talk about, is how to confirm it. Don't just guess that they're going to be there, just confirm it first. And with that process of confirming it, it means you have to let a candle or two tell you that there are buyers right there, right? And in this case, being a weekly candle, I would like, if I was trading AMD in these levels, I would like to see another candle get placed like this right here, showing me that these same buyers are okay buying this dip again. And if they are, then hey, it may be opportunity to buy AMD right there and just see if maybe they can shoot up to 170 this time, or maybe 150 and try to capture that profit in between. So that's that. But let's assume that they do not buy this dip and they're just ready to let this thing fall because they're not seeing value at the 121 to 132 area, which is already showing they're not seeing value at the 132 because they're allowing prices to crack through that. So we would expect to see AMD fall down into right here. We got a nice little spot right here at 106, 109. This could be a potential spot where they are going to allow it to fall down to. And if not, even all the way down here to the 91.96 area. That's the demand zone right there. You can see that's verified by this right here. So this right here, that right there tells us that these are golden zones. It just confirms those golden zones. Now, it doesn't confirm that there will be buyers this time around, but it confirms that there have been buyers in those golden zones in the past. So you can bet that if the price does fall into these zones, I will be dip buying, only because we've already seen a lot of negative price action. Hey, why not? Let's just get one bounce off this thing, right? So that's that. Moving on the list, we have Apple coming up. So Apple has just been on a nice little tear right here. If you follow my Twitter, I posted this a few times. I told you exactly what the price action was doing. I told you why I was bullish, and it is doing exactly what I thought I was going to do. So if you're curious about what I have going on right here, this is a Fibonacci extension again. You can see this triangle, right? That's the measurement. This would be A, that's B, and that is C right there, ABC. It's going to be the same configuration as the last one, starting with 1.618, ending up in, this one ends up in 4. But it's the same configuration. You can pause that video, rewind it if you want to get those values again. And then I also have a Fibonacci retracement, and that one goes from this high to this low right here. And on that one, all I'm showing on that one is the 786 level, 0.786, and 0.86 level. And that was actually, that's not even necessary. Oh, you know what? Hold on a second. Yeah, that's not even necessary no more. So we can actually just remove that. But you can see that really all I have on this now is a Fibonacci extension. So what this will highlight to us is pretty much where Apple is going to go. If you understand anything about Fibonacci, it's that these levels, these areas, they act as magnets when read correctly, when applied correctly. So you can see how much price action just kind of bounced around this area right here in this Fibonacci sequence, the 161 through 200. These are all weeks. So let's actually switch this over to months, and we'll see right here. So you can see 1, 2, 3, 4 months. It just kind of hovered in this area, and then finally in November, right, it found buyers that just cleared the whole entire path. This was buyers right here just speaking clearly, saying we're done messing around in this area. So therefore, when this happens, they're saying we're done and we're going to take the price to the next level. Well, it's easy to find the next level when you understand Fibonacci, because all you do is you see where the next sequence goes to. And in this case, there it is, 254.02 through 267.16. I'm going to switch this back to the weekly. So therefore, if you're wondering for price targets, where is this thing going? Well, there you go, 254, 259, and then 267. And you can see how long it took right here, how long it consolidated in this area, right? Because it made a move from right here into the Fibonacci extension. And it's got to have, profit taking, find new buyers, decision making, is it worth taking it to the next level, et cetera, et cetera. Obviously it said yes, so they're going to go straight to the next level right here. So this right here is a good area to take profit if you're in a short-term, swing trade. Also, too, just good to know. That way you don't wonder why is the price slowing down. Is it going to go to 300? It might go to 300, but once again, you have to think it's going to have to maybe consolidate for a little bit in this zone. And if it's going to make the final move to the next level, it's going to be right up here, 288 to 301. And once again, that's just simply following the simple Fibonacci sequence. And I know this is simple, guys, because I've been doing this for a very long time. It's in my book. I'm not trying to sell you on the book, but if you are trying to learn it, it's in my book. That's literally what I wrote. All right, moving on. We're going to go into Nike next. Nike is a trade that I'm still in. I really like this play. And I like it. I mentioned it on my Twitter a few times because this golden zone is just holding so well. It's held for 1, 2, 3, 4, 5, 6 months. For 6 months, guys, buyers in the market have said, we like this level. And it's still here. So a stock will linger around on these zones for a lot of reasons, but one is the market is just not ready to mark this up. They don't have a reason to mark it up. They don't have a catalyst. There's no good news. The ratings people, they haven't came out and set price targets of 90, right? They haven't set price targets of 115, because what these ratings people will do is, I'm just gonna guess this is what they do, because every time they set new ratings, it's always Fibonacci zones. I know they're not using Fibonacci. I doubt they're using Fibonacci, but somehow their estimates of where they see this price going is always in these zones. So that's kind of a little hack that I use as well with my Fibonacci, is that if I see a bunch of ratings come out, upgrades for, like, let's say for example Nike, and they're saying this stock, they can see it going to the 110, 120, 110, 115, 120, then I know that they're setting this up so that way the stock, it already has all the whales in the trade. These guys are already filled. I know there's a few activist investors, for example, that started buying in here. So that's what makes me love this play even more. But when you start seeing them create these ratings, right, and these ratings just happen to land in these Fibonacci golden zones like this one right here, which this is a supply zone, that's when you know they're just ready to make the move. And they're gonna set it up and they're gonna say, hey, it's worth 110, we see this 120, and then the stock makes its move up to that area, and they sound like geniuses, and their accuracy rating goes up, and it's just a game. That's all it is. So yeah, so I'm still in this trade this month. Like I said, it's still early. It's the 10th. We still have time to go. But I do expect for the market to hold Nike between 73 and 76. Why? Only because it's held for the last 6 months. That's why. So, like I said, I am in a position in this. I do have it in both my portfolios. So I am pretty biased on this as well. But even if it falls down here, that's fine too. And the last one review for this video right here is going to be Celsius. Celsius is a great learning lesson. Celsius, I've mentioned it on my X account a few times. This is a definition of a growth company that made people money, and then people just got too comfortable and stayed in it, thinking this thing was just going to go up and up and up forever. While that might be the case for some names, that's also not the case for a lot of names. And you have to learn when to take profit. If not, you get caught in these kinds of moves right here where the stock will give up all of its gains real fast too. The markdown process happens real fast, as you can tell by Celsius. So anyways, I don't want to get into this too deep. The only reason I'm highlighting this is because right now Celsius is trading in the golden zone. So I am long here, and I am long simply because, once again, this is the golden zone figured out by Fibonacci, and this is actually incorrect because we have a new low right here. So this low is 25.23, so this should be going down all the way to 25.23. There we go. So as you can see, the supply zone just moved down, and that's what you're able to do when you learn how to, master Fibonacci. Is you can see where the demand zones are and where the supply zones are. So with that being said, this thing, the last time it was in this golden zone right here, or what do you want to call it? You can call it an institutional buying level. I think that's more of the professional way to say it. Some people call it the value buying area. Well, guess what? I call it the golden zone. So right here you can see 1, 2, 3, 4, 5, 6 months in a row, not in a row, 6 months in the past. Institution's about to dip right here. They found a lot of value and then they marked it up. That's when they marked it up, right? So I didn't just buy into this blindly because it landed in there. I waited for it to confirm to me that the institutions were buying. And that was then possible because you can see all this massive selling, right? But look at how when it comes down to the institutional buying level, you can see how the candles literally hold up right there. I'm gonna switch it to the weekly view so you guys can see this. You can see, look at that, they get triggered. See, buying orders get triggered. Look at the buying volume right here. This is all buying. Look at massive buying. Why? Because these are just programs, these are institutions that trigger the buys. I'm sure they don't use Fibonacci, but I'm sure they have very complicated algorithms that discover these zones and are able to buy them. So since the monthly candles started holding on this, you can see now 1, 2 candles. These wicks are the giveaways right here. These wicks show me that there's institutions buying, by the way. And what I like about this, and I've seen these plays happen before, is that they're selling, right? And there's massive selling. Look at this massive selling bar. But look at the prices holding at the golden zone right here. And again, look at, you have massive selling again. And by the way, this is a script that I wrote right here that only highlights greater than average buying, which is green, and also greater than average selling, which turns red. Everything in between, anything that would be considered average volume, is actually right here in gray. So when I see greater than average selling into a golden zone and the price is holding just like it is right here, then I know this golden zone is intact. Institutions are buying, they're loading up, they're buying the dip, and then it's just kind of a matter of time of just waiting for them to make the move up into the supply zone, right, which is right here. This is the supply zone right here, which would be 42 through 53. So you can just slice it down the middle and it'd be somewhere close to 50. So I've bought a contract going into the 50s. I think I'm targeting June, ensuring myself to give myself time. I never try to really time a move by buying a daily or a weekly. That's just foolish in my eyes. But I am long on this one, and I do plan on selling when Celsius makes the pop into this zone right here. And there is more Fibonacci that I can add, and I can get way more exact of supply zone where all the major sellers are going to be at. But I know I'm generally targeting this area, which would be the stock traveling about, about 50% more. So going into, $46 about there. That's actually where I'd be targeting. So that's kind of it, guys. I just want to recap those with you guys. If you guys are interested in following my X account, I'll drop the link down below too. I always just drop a lot of cool stuff on there. And also too, my book is going to be down there in the link. If you buy it, cool. If you have any questions about the book, go ahead and shoot me a DM. I'll answer it as best as I can. But with that being said, this video has already gone on for 25 minutes. I will see you guys on the next round, and maybe the next one we'll just do a Fibonacci learning lesson so I can teach you how to lay out the Fibonacci. All right, guys, stay safe in the markets. Don't blow up. Be smart about how you approach these stocks. And I'll see you guys on the next video.